Hi all, this is Z from MarketWizards.com and eMeaningWizard.com, and it is Saturday, the 27th of October. Just doing a quick update that I'm going to call Hindsight Trading or Monday morning quarterbacking. A reminder, trading is risky, and anybody that aspires to be a trader, make sure using risk capital you can afford to lose. A reminder that we do have a webinar coming up with Ninja Trader, November 8th, 4:15, and right on our homepage, a link for you to register if you would like to check out our system and the things that we do. And once again, fair disclosure, that we want traders to acknowledge is a risky business and trade with capital you can afford to lose. I believe one of the most important things we can do is to do hindsight trading. Obviously, with the benefit of hindsight, we certainly can be a lot more precise with the action of the market. But if we do study that, even in hindsight, we start to see patterns emerge and get some clues about how the market moves. So I'm going to do a quick study on a few different days, add about 4 or 5 days to this study, and then let's see if patterns start to emerge. We're going to start with that recent high right near 2,800. So this is without the benefit of any type of market structure here, just a blank chart. Let's start there. I've added the E widget to a 2-day swing, and I've set it for the lows and the highs in this 2-day swing, and we'll notice some patterns start to emerge. Now certainly we don't know when we get here at 49.75, that's the end of the run. But some traders will note that that's about a 50-point trade, and the market wanted to take some profits in here. And you're going to find the 456 trade is going to bring you back into the middle zone. Nobody knows exactly where, but certainly the goal is to try to get back into that 75, and then the rest of it is horse trading, as they say. So this spike high over here is certainly going to be resistance until broken. And then let's take a look at what happens as trade evolves. We've added the next day into the mix, and now we can see that we've got obviously over a 100-point trade. Bounces very sharply and strongly off the bottom, the floor at 92.25, and we come back into that core. Notice how this is a retest of this breakdown right here. You've got to look back a day or two to see these breakdown areas and understand where the market's going to bounce back to. So we already know that this is a bounce and a profit-taking bounce, a very, very strong bounce. This is the type of trade that surprises a lot of traders. The hallmark of a market that is correcting is sharp bounces that roll over and then sink to new lows again. And we can see that pattern continuing to produce gains for the short side. Sharp bounces, roll over, and then another steep push. We break a double bottom in here, just under the 2700s. That 95 to 92 area gets taken out, and then we get this third time through trade again. And this, we had talked about it that day in our room and said that's about a 100-point trade, and you better be paid by this 52 to 50, 55 area. Just because anytime you get those type of gains, could go forever, but you have to be reasonable and think, better grab some profits out of that swing. Now we get another sharp bounce, seemingly out of nowhere. And we can see right under this 70 area where this is trying to hold, this double bottom. And we get that sharp, sharp push. Remember that last week? And we got up to that 23.75, 24 area, and we had said, let's use 27, 26.5 as our resistance. And this chart clearly shows why. And then at the end, we have earnings coming out. And the end of the day, we get that sharp sell-off and comes right back down to that 70, 75 area. Year open, of course, has something to do with this target, but the simplicity of this approach and looking at the patterns like a downtrend line here and understanding the mechanics of the math. And this is all done with one simple tool, the E-widget. On Friday, I leave. I tell our room, I think they're going to try to test 75, maybe even close the gap, 85. Be conservative. I think the low is in. We get a sharp bounce. I'm playing golf, losing a few golf balls. Guess what? You come back and you can look and you can almost set your watch to this resistance zone right here, just based on this swing that we have talked about. Now, some may accuse us of curve fitting. I don't care. This is really for you to help you see the things we're looking at. This is a tremendous help for us, and you need to find the swing that's in play, just like the chart in play. And something like this catches my eye when it's that precise in terms of a resistance. It shows me the validity of using empirical evidence in charts like this. Let's take a quick look now. Now, this is obviously a swing type trade. Let's take a look at another way to use the same tool. Right here, we have a 2-day chart, and we're framing it from Thursday's high all the way down to Friday's low. We can see we get that sharp bounce that comes back up, and it takes out that 75 area, and then comes up and runs up, closes the gap, and then this is that breakdown right here we had at that 92 area, and which we just showed on the other chart. And look how that turns on a dime and sinks back just above the core in here, what we call the pipe, right around the middle. And then it sinks back, and lo and behold, it stops just above level 1 at the 41 area. And this level right in here is tad under, about a tick or so under 40. Stops right here, and then we get a bounce into the close. And this is what I had referred to the other day when I'd said we were making lower highs and higher lows right here. You can see that pattern. Let's take a look at one more. And all this we're doing is trying to analyze in small frames and large frames and using the same basic tools. Okay, so now I'm looking at an intraday chart, just the lows and the highs of the day. I had that sharp push. We turned around, we came back towards the middle, we bounced, retest failure, and then we came all the way back down. And this is where I'm coming in after playing golf, saying, okay, let's take a look. All right, got to use 40. We said this is about a 50-point swing. Somebody's going to take profits by the end of the day. So use this area right in here, 37.5 to 40 as your support, and think that the market's probably going to try to bounce back in. Could go any place at the end of the day, especially with options, but the feeling was that we'd get some profit taking from this great swing. And this swing long side deserves some profit taking too, obviously. So there's a 50-point swing. Do the math in your head, and you figure it's going to get to 65, 67 area anyways, which would be the top of the pipe. Now here's an intraday swing, and we're looking at the high, and then we're looking at the swing low back here at 41. And note the bounce comes up to the top of the pipe, this core area, reflecting this swing and this swing. And we don't need to know anything else other than the last lows and last high up here and last low, depending on what we're using it for, whether day trading or larger time frames. So right now, this is reflecting that smaller range. And here's a 1-minute chart, and this time we're reflecting the lows at that 41 and the bounce high at this 72, 75, stalls, retest failure, comes back in and still holds the 50, right? This is about a 25-point swing in here. We get a retest failure at the end, still using this 75 idea as resistance. And then we close and come back in towards the middle as these traders, these last swing traders with this high, take their profits to end the day on Friday. And depending on how fine you want to tune this, we could take that last swing with 50 and a quarter and just above here at the 70 high on this last swing. And we can see that we really did come back and test the middle of that swing as well. The market does this over and over. And so realistically, what we try to do as traders is come to understand the market from the large time frames and the intermediates, and then obviously into the smaller. And this type action happens over and over and over. And I'd like to submit to you that tools like this can help us to understand better how the market moves, no matter how fast it's going. With a click of a button, put the swing size on, and then try to find logical areas that will be next retest areas. This is Eve for MarketWizards.com and eMiniWizard.com. Reminding you of our special presentation coming up shortly, November 8th. Hope to see some of you there, and thanks for listening.